Hi, I'm Wal Galbraith. I'm a part of the Ray White South Coast Group, and this is your South Coast Snapshot for week 13, 2023. Now, the snapshot is designed to give you a bite-sized breakdown of the real estate market overall, including local, regional and city-based information across Australia. All information is sourced from the AFR, leading economists on Twitter and the Sydney Morning Herald. All information is relevant to buyers, property owners or both. Apartment rents have surged over the past 12 months, delivering income windfalls of up to $11,000 for investors, across suburbs gaining the most. The sharp rental increases, with 57 suburbs rising more than 20%, have come as vacancies hit a new low of 0.9% across the combined capital cities during February, CoreLogic data shows. According to Tim Lawless, CoreLogic Research Director, they also reflect the rising demand for cheaper high-density sector as renters trade space for rental affordability. Rental affordability pressures may be forcing a demand transition towards higher density rental options, where costs tend to be lower, Mr. Lawless stated. Suburbs in Sydney's inner south, eastern suburbs and inner west dominated the list of the top 10 biggest gainers, led by the Sydney Haymarket, the Rocks area, where unit rents climbed by 27.8% or $211 a week to $969, a $10,972 annual rental gain. Melbourne topped the areas with the fastest rate of rent rises for the apartment over the year, climbing 38% and adding $168 to a $612 a week rental. 5 other inner city areas also notched up more than 21% annual gain, including South Bank, Carlton, Docklands, North Melbourne and South Melbourne. Canberra posted the sharpest slowdown in house rents, easing from a 10.5% annual increase at the height of the pandemic to just 0.8% over the year to February. Cash-poor retirees are tapping into the equity in their homes through reverse mortgages to cover rising living expenses as the industry tries to improve its tarnished reputation following the withdrawal of major banks. As the population ages, policymakers are keen to encourage retirees to draw down on their wealth to fund their incomes. Treasury's Retirement Income Review of 2020 drew attention to reverse mortgages as an option. Major banks stopped selling this type of loan last decade amid concerns about the risks to their reputations. A 2018 corporate watchdog review said reverse mortgages played a role in helping older Australians. Still, lenders had failed to consider the risk of the products, such as how retirees taking out the loans would afford future costs such as aged care. Data from CoreLogic shows that houses in nearly 6 out of 10 Sydney suburbs are poised to retain at least some of their pandemic gains as the market further stabilises, despite the sharp fall in prices over the past 12 months. Suburbs were likely to retain their COVID-19 gains if house prices stayed at least 10% higher than when the pandemic began in March 2020, said CoreLogic Head of Research Eliza Owen. Nationwide, 8 out of 10 suburbs are likely to hold on to their pandemic capital gains, while house prices in nearly all regions are set to stay above pre-COVID levels. While the 10 back-to-back interest rate rises fueled a 9.1% drop in home values nationwide, prices are still 14.8% higher compared with pre-pandemic levels, CoreLogic said. New listings for investor-owned residential properties have nearly doubled nationwide since December. Some landlords may look to offload assets to ease the pressure of rapid interest rate rises. Over 5,000 investment properties were listed for sale in the past 3 months, lifting the nationwide tally to 10,542, data from CoreLogic shows. Investor-owned listings account for 28.9% of new stock on the market, a 1.9% rise since December. Tim Lawless, CoreLogic Research Director, said the share of investor-owned listings was still lower than last year's peak when it accounted for 35% of all stock, but has climbed higher than the long-term trend. Although rental income has risen amid record low vacancy rates in most areas, the rise in rents hasn't been enough to offset the rise in mortgage repayments. In Sydney, the volume of investor-owned listings has tripled to 2,030, increasing their share by 2 percentage points to 33.8%, the highest level since last July. Across Melbourne, ex-rental listings have more than doubled to 2,114. In the ACT, they have climbed to 219, while the other state capitals had listing increases of between 41% and 80% in the same period. Going across the pond to New Zealand, the REINZ reported a 0.1 monthly rise in its house price index in February. This followed a 1.4% fall in January and a 1.7% fall in December. And while the falls have almost certainly not ended, the pace of decline when smoothed out is decidedly slowing. Net migration flows have turned on a dime. Just 6 months ago, the net annual migration flow for New Zealand was a loss of over 13,000 people. The flow has switched to a net gain of 33,000 for the year to January. Looking to make the best use of the current market or considering your financial options? If you're either expanding your property portfolio, refinancing, or looking to sell your current property, get in touch today. We'd love to help. I'm Wyle Galbraith with the Ray White South Coast Group, and that was your South Coast Snapshot for week 13, 2022. See you next week. Be well.